You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Please welcome Bill Ryan, Director of NYSE.
Great, we got some people to show up. Very good. Well, welcome back. I hope everybody had a great time last night at Bottle Blonde. It's a nice place, wasn't it? So I have to admit, we were a little sneaky last night. We did something we didn't tell anybody we were going to do. And if you noticed when you walked around, we had these big, basically horse troughs full of beer, each one from a different exchange. So we asked each exchange to give us a beer that they wanted to have, preferably a local beer. And we had a contest to see which beer was more popular. And it turns out that Huss Brewing Orange Blossom, chosen by MyAx, was the most popular beer last night. So I have a trophy. If Shelley or John or somebody is here from MyAx. Just a little something for your trophy case down in Princeton, Shelley. You were not that late. Come on, you can move a little faster than that. We got a program to run here. So the plaque reads 2017 OIC Exchange Dinner Best Beer. Oh, great. There you go, Shelley. All right, so like the U.S., Europe has been going through all kinds of changes lately. Let's talk about regulatory changes, Brexit rather. How do these changes impact our world? So we have Gary Delany, Director of European Marketing and Education for OIC, and his panel to discuss the European changes and how they affect us. So please welcome Gary and his panel.
Good morning. Thank you all for attending. It was a late night last night for a lot of you, I know. And I feel a little bit like the very old actor who was at a theatre in London, and there were sort of two old ladies and a cat in the audience. And at the end of the play, he said, thank you, one and both. Now, I can see from your shapes there are more than both, but thank you anyway for making the effort this morning. But to make things, perhaps a little brighter for you if you're feeling a little jaded, we are all wearing bright socks, as you can see. Now, Ivan set the tone for that yesterday, but we're doing our best to engage you early in the day. So the theme today is Europe, like us, but different. And some of the things we're going to be talking about, the pain points, we're going to be talking a bit about regulation. We're trying not to make it just what I call a regulation fest, but we will be going into that. We'll be looking at opportunities and some opinions on Brexit. So quite a lot to cover this morning, and we'll do our best to keep things moving along. We've got some questions. I'm sure you have some questions to ask us later, so that will be good. Let me introduce our esteemed panelists this morning. At the far end, we have Georgio Stoev, who is Futures and Options Product Manager for Saxo Bank AS, who are one of the leading online brokers with offices around the globe. And although he's come all the way from Copenhagen, he is, partly a local man because his Bachelor of Science comes from the University of Utah, and his MBA in Global Management comes from the University of Phoenix. He's responsible for all aspects of the Futures and Options product line, from strategic planning to tactical global distribution. He's also responsible for educating and promoting products internally as well as to end users, and he looks after the relationships that Saxo has with strategic partners OIC, SIBO, and CME. He's done various jobs in the financial services industry, from equity trader and wealth manager to options educator and content developer while working in the US and in Europe. He joined Saxo Bank in 2012 from TD Ameritrade. And then we have Frank Magnani. Frank is well known, I'm sure, to many of you. I first met Frank on the top of a mountain in Switzerland about 30 years ago. And our relationship grew from there, really. He said here that he's a seasoned sales and marketing executive, and who am I to contradict that, at Interactive Brokers, and his experience spans across global prime brokerage and execution services, clearing, product development, operations, risk management, due diligence, and developing strategic alliances. At the moment, his primary focus is hedge funds, proprietary trading groups, and advisors. He's founded several prime brokerage divisions within financial institutions, launched a third-party marketing firm, as well as implementing the operational trading, sales, marketing infrastructures for those. His past experience includes being global head of clearing and prime brokerage sales for Investec in the US. And previous to that, when I first met him, he was responsible for managing the European offices of the American Stock Exchange. So that's us in a nutshell. About me, I've worked for OIC since 2010. Before that, I've worked for other exchanges. I traded an options book on the London Metal Exchange. I worked for a vendor. So, I too have been around. Let me start with some general scene-setting comments before we dive down into some comments from our panelists. As I've said, the theme of this morning's discussion is like us but different. And just like in this country, Europe is suffering from, well, not suffering, but it has a strong regulatory tide running at the moment. And you can tell that is the case because the ambitious people seem to go into compliance now, which tells us something about our business. I find that a little shocking, perhaps. But I don't know if have you done the compliance test at a cocktail party? So you meet someone, and they say, what do you do? And you say, I'm in compliance. And you just get this sort of glazed look, and the person then goes and finds somebody more interesting. So you can't have everything. Anyway, so regulation is a challenge for us. Brexit is another added layer of complexity. As you know, in this country, secession from a union always brings issues. It's difficult. So is the UK going to be punished because it wants to leave and it has triggered Article 50? There's no going back, or is it going to be a more equitable settlement? It's a 2-year process. So we shall see. What challenges does the exchange-traded derivatives business face? And I think regulation I've mentioned. Scarce capital is another one. Rising costs, falling revenue. It's just like here. One thing which is different are investor attitudes. And I think if you look at the typical American investor, they have a closer relationship, I believe, with the individual stock. So you might always have owned IBM, when it's getting to the top of a range or bottom of a range. So the use of an option comes naturally out of holding that stock position. Now, in Europe, it's different. People are much more likely to invest their money in some form of fund, whether it's for their pension or just regular investment growth. So the attitude is different, and I think that's a very important thing to remember. The European market structure, obviously our focus is going to be on the US market here, but it is worth saying that the European marketplace, you've got competing equity option exchanges, mostly all in a silo structure, so you can't open your position in one place and close it another and then net it out in the clearing. It's completely different. So you've got the vertical stovepipe. There's a lot of interest in volatility products in Europe, and I've read that SIBO plan to roll out VIX-style products on some of the BATS products. Eurex is promoting its V-stocks stable of products. The volume is obviously much less than VIX, but there is a reasonable volume there. And we're seeing volatility, I suppose, as an asset class with hedge funds and sovereign wealth funds, in there doing stuff. So that's just, a quick scene setter from me. But I now want to turn to excuse me, our panelists. And perhaps you can tell us a little bit, Frank and Georgio, about what your institutions do, what sort of things you're trading, how you process your orders.
Sure. Interactive Brokers, for those of you who are not familiar with our offering, we're a global execution and custodian firm. We're a member of the New York Stock Exchange. We've been a broker-dealer since 1994, and Interactive Group has been around for 40 years. We're licensed and regulated by 16 self-regulatory organizations, which includes the SEC, CFTC, FINRA, the NFA, Hong Kong Securities and Futures Exchange, the United Kingdom. We're a member of the OCC, DTC, and the NSCC. And we're a member of 120 exchanges, clearinghouses, and trading venues worldwide. We have support offices around the world. We have 2 in the United States, which are in Chicago and Greenwich, Connecticut. We have 1 in Zug, Switzerland, London, as well as Hong Kong and Shanghai. And all of those service providers, all those service centers provide support, trading support, operational support to a whole cross-section of clients, which include proprietary trading groups, retail customers, broker-dealers, banks, introducing broker-dealers, family offices, and of course, hedge funds.
Okay, thank you.
Yeah, thank you. Thanks for having us. This is my first time to this venue, and I feel part of the family now. So being kind of feeling a little bit out in the post there in Denmark, Copenhagen, it really is rejuvenating to come here and partake from the environment and the energy. So thank you, Gary, and
thank you for coming.
The Options Industry Council for the invitation. So yes, we are, Saxo Bank is a privately owned Danish investment bank. Was founded by Kim Forney and Lars Sier Christensen in 1992. So we do have history as well, just like Interactive Brokers. We have wealth management and private banking, but the core of our business is electronic trading. We're also global, but not really global in the sense that we are not present in the United States. But we have offices in Latin America, throughout Europe, and APAC. Our original founder, Lars Christensen, just sold 25% of his stake in the company. And we're excited to have a new investor. It is a Chinese conglomerate. We're looking really forward to leveraging on that relationship and provide electronic services, electronic trading to that part of the world. Options, you may find that interesting. So we're multi-asset. We provide electronic trading of fixed income, CFDs. For those of you who are not familiar with the product, it's more or less an equity leverage product, like equity option. So it's a contract for difference. Our core product still remains to be Forex. We provide over 150 crosses there. And of course, equities and more recently, listed options. So I became a manager 2 years ago, but listed options were started 4 years ago. So it's a fairly young product, but as you would expect, it's growing quite significantly. And about 2/3 of the flow we're delivering comes to the U.S. So it's all U.S. listed. It continues to grow. I think for the last 4 years, we've grown fourfold. Our users have grown, they've quadrupled. So we're seeing a huge demand and surge for more listings of options, for more education, and for a stable environment for the users to trade. Most of our clients are retail clients around Europe, as I said, to identify some patches that we see particularly interest in listed options would be Middle East. We have offices in Dubai and Abu Dhabi and Zurich, Switzerland, London, of course, to name just a few, and of course Singapore and APAC are the ones that really conduct and demand listed options nowadays.
Right. Okay. Thank you. And what sort of strategies are you doing? Does it tend to be fairly straightforward stuff, or Frank or Georgio?
Well, the clients who utilize interactive brokers, those trades are all self-directed. We don't give any advice out.
Yeah.
So what we see primarily in Europe is you see a strong focus on, of course, options.
Yeah.
We also offer contract for differences.
Yeah.
We see lots of futures trading as well as commodities trading. And the type of strategies out of Europe, I guess you have to put them in two buckets. You have the retail, and then you have the institutional. On the retail, I would say many of the strategies are really plain vanilla, especially with options. Buy call, buy put, spreads. When you go on the institutional side, the educational level goes up tenfold.
Yeah.
And you start to see more of the elaborate strategies that are employed in the United States by many of the traders and market makers.
Right, okay.
I also shared the same view. European users, in respect to retail users, they still lack the literacy.
Yes.
And I recall going back 10, 15 years in the U.S., starting in the education business for trading products. It was very similar. So it takes me back about 10 years in terms of the level of education. So most of the strategies we see is just directional strategies, long calls, long puts. But they're really eager to learn. So we, as part of our distribution tactics and planning, we have a full array of webinars, videos. Of course, you're a regular guest, and I don't know if Russell Rhodes is here from the CBOE Institute. He's counting cards probably at the
Blondies. I saw him at Blondies.
Okay. So a few of you are very integral in terms of supporting that education, which makes for informed client, and the client now knows, about that product that they're going to work with. And, everybody's better off that way.
Yeah. Yeah. Good. Okay. Thank you. Excuse me. We're going to go on to some of the challenges that face the industry, and we're going to do we'll do a little bit on regulation. I'm going to outline some of the pieces of legislation that we're going to talk about briefly. If we talked about MiFID II, PRIPS and Kids, FATCA, Basel III, 871M, market abuse regulation, and EMIR, to name but some of them, we'd be here all night. So we won't do that. Right, let's start with MiFID. And I've said at the top, stay awake, this is exciting, okay? So MiFID means Markets in Financial Instruments Directive. It's set to take effect after a 12-month delay from the 3rd of January 2018. In an interesting survey in April of this year, 64% of financial institutions said they are unsure or not confident about meeting that deadline. So, fun time for all. The aims of MiFID II builds really on MiFID I, tries to fill in some of the gaps. Firstly, there is a derivatives clearing obligation for standardized OTC derivatives. They have to move to a cleared basis. Another one which is interesting for this morning, I think, is the open access part of the legislation, and that is that non-discriminatory access has to be given to trading and clearing infrastructures. There are various get-out clauses there, but the idea is to enable people to I suppose have some capital offset. That's in the longer term, but there is this open access. Now that may in fact favor the existing infrastructure providers, because obviously they're in a dominant position already. But I think it is a constructive move. And then research, you can no longer bundle up research with the brokerage. So that's causing a shakeout in that area. So I'd like to ask you to really how MiFID II impacts you. What you feel about it.
Well, I think MiFID II for a number of European institutions is going to be a very big challenge. If you look at IB and its infrastructure, we have 80 compliance officers and attorneys throughout our organization. So when you look at how we're in all these different venues and all the regulations that's required, I think it's going to be a tough job for a lot of these compliance officers to put together all their financial procedures, the disclosures, all the rules and regulations that are applicable. And I think it would be difficult for them to meet that deadline in January. Yeah. I don't know how Georgio feels about that, but.
I mean, there's this sense of urgency and a little bit of a chaos. There are many directives and regulatory laws that are coming into place, or they've been embedded since Dodd-Frank.
Yeah.
And we sort of, to Europe, all these regulations came, a couple of years later. Of course, MiFID came a little earlier. But in general, it's been within the last 2-3 years that we are seeing surge. We've also increased our compliance department. Yeah. So from, being in Europe and of course, we're part of the European Union minus our
we're still members, we're still paying.
You're now an island.
And they want us to pay till the year 3000, but that's another story.
Nevertheless, we're still seeing fragmentation within the regulation, which is really a challenge for us, having over 10 offices in Europe to really do business, and for the clients to have a competitive product with competitive prices.
Yes.
So I'm hoping that from all of this, for the products we cover, futures and options, over the next 2 to 3 years, we'll see a little bit of more of a pan-European regulation that would not require every single country to apply that directive.
Yeah.
Because the directive is really more of a suggestion. Yes. That could become a law.
Yes.
And so it's been really difficult to do business within Europe.
Yeah.
I see that this is an opportunity to really, level off and do business easier.
Yes.
The regulators can't expect the European community to do something in a couple of years, which the U.S. has done for many, many years.
Yeah.
And it's a very tough deadline, I think.
Yes.
But I think it'll be good for the retail and institutional investors to implement a lot of those strategies and suggestions that they're offering to better enhance the marketplace.
Yeah.
And to entice more people to come into it to trade.
Yes. Before Brexit, the commissioner handling this area was Lord Hills, and he stated, that we have got a lot of regulation here. Do we need it all? It's time to call a halt and examine what we have and see if it is fit for purpose. Of course, after Brexit happened, he resigned, so it is now under a different commissioner. But I think that comment by Lord Hills echoes perhaps some of the trends that you're seeing in the business here as well. Anyway, good. Well, let's go on now to the exciting world of PRIPs and kids. A PRIP is a packaged retail investment product where the amount repayable to the investor is subject to fluctuations because of exposure to reference values or the performance of one or more underlying assets. And the EU is bringing in an obligation from January of next year that people or firms that produce or sell investment products have to provide a KID, which is a key information document. You may remember that the disclosure document for US equity options is, I think it's over 150 pages. So helpfully, they've said that a KID should be a maximum of 3 pages and include the following information: the name of the product and the identity of the producer, the types of investor for whom it is intended, risk and reward profile of the product, including a summary risk indicator, the possible maximum loss of invested capital, and appropriate performance scenarios, the costs investors have to bear when investing in the product, and information about how and to whom an investor can make a complaint. So, again, as Georgio was saying, this is a heavy overhead to carry, while you're also trying to build your business. And I've spoken a lot with Saxo about kids and PRIP, so perhaps you'd like to comment there on how it is for you?
Sure. So it's a challenging undertaking to produce these key information documents to clients, and the start is January 1st, so it's coming, fairly quickly. Last we heard about, there's a majority of brokers and banking institutions are not ready to meet that deadline of January 1st. I personally took a good couple of weeks to put this in place. So it's basically a document that's required from any manufacturer or producer of a product. So this would be an exchange. This would be maybe a clearinghouse here. And of course, the distributor, which is us, Saxo Bank, to produce that document to every client that gets on and checks that option to trade options.
Yes.
And the challenge is to put it all in 3 pages and in plain language where the client will understand. And we've made a few references to the OCC and the OIC,
yes,
for that matter, to that 180 pages document nowadays.
Right, yeah.
When I first started, it was about 100, I think. That was 16 years ago.
Yes.
So now it's 180 here. I'm talking the characteristics of risk disclosures.
Yes, yeah.
So we're referring to that, of course, and so it'd be interesting. On top of that, you have to translate it in all these languages.
Yeah.
So in our case, it's 22 languages. But the positive, I think there's a lot of positive things around this PRIPs and KIDs European Commission initiative, and that is really, from a product standpoint, I see it as a way for me to educate the potential client.
Yes.
And that's how I see it. And more education is needed. More information about the products, the specifications. That's our part. So.
Yes. Yeah. You got anything to add, Frank?
Our firm is acutely aware of what needs to be required. I mean, the deadline. But I would agree with Georgio as well. A lot more education is required. And I can't imagine a European retail customer reading the OCC document when he can get a 3-pager and look at that and say, okay, this is an overview of what I need to do, and this is the understanding of the product, and then he can go to, his representative at Saxo or at some of the other member firms to get a better description.
Yes.
And it also protects the firm with disclosure.
Yeah, and I suppose also it helps the contrasting of different products, say an equity
Yes.
option with a structured note or something.
Right, and they are different. The
Yeah.
risk and
Yeah.
rewards are totally different.
Yeah, that's right. Okay, last little bit of regulation here. FATCA, the US Foreign Account Tax Compliance Act. And this is not new, but it was intended to essentially identify US citizens abroad who were holding assets outside the US. But at the time, it got quite a lot of flack as being, an intrusive regulation. But to be honest, since then, a lot of the European governments have said, oh, that's a handy money earner, we'll do that as well. So perhaps, it is more of a common approach here. But do you find that an onerous thing for you, Frank?
Initially, when it came out, I recall it was very tedious to explain to the clients and to get them to sign it, because everything that we do is online. Right. So you had to make a lot of phone calls to get people to do their declaration. But I think now, since it's passed, it's not as difficult to get them to agree. And if they don't agree, then they're not trading. Simple as that.
Yeah, simple. Yeah. Okay. In the interest of time, I'm going to go on now to some of the other challenges that we face. Let's talk about, how about cybersecurity?
Well, I think that's, cybersecurity is certainly a topic that touches everyone in this room.
Yeah.
Whether it's credit cards, whether it's trading, whatever. So at Interactive Brokers, we're always concerned about cybersecurity. So we've implemented a number of tools that will enable a retail customer and an institutional customer to protect himself. So we issue cards, they're like, we call them bingo cards, where if they want to basically log into the trading system or log into their account, they have to scramble, the numbers are scrambled, and they enter the numbers on the system, and that will identify them as that particular individual. Further, we set up different procedures depending upon the client's approval process with regard to withdrawing money. So we have different levels where they can take out a certain amount of money, and if they have enhanced security, then they can withdraw as much as they want. It's their money after all. But the reason why we put that in place is, God forbid, someone breaks into their account, they're not able to withdraw all that money, and there's certain levels and enhancements in the system that would prevent that from happening.
Right.
And we're very aggressive on that. We're very careful with that.
And I guess Saxo, having built its systems later, obviously has state-of-the-art stuff, I would guess, Georgio.
Yeah, I mean, we continue to enhance in building technology. We are a technology firm, like many of the colleagues here. We pride ourselves with the security, and we do have, the multi-layer protection systems in place that, oftentimes will prompt you to add some additional information. And also want to mention that in certain jurisdictions, such as Switzerland, for instance, which is its own entity within the Saxo Bank, there's even other means of protection, of security protection. Same in Singapore, we're seeing. So we're taking that very seriously.
Yes. Okay. Right. Good.
And to withdraw money from an account, at our firm, there's a verbal authorization. We speak directly with the client. We ask them security questions. Right. If they answer them properly, then it's their money.
Yes. Okay. I want to talk a little bit about competitor products. Obviously, there are competitor products in this country to US equity options, but Again, in Europe, they are perhaps slightly different ones. We have CFDs. Now, a CFD, it's a contract for difference. It's a bit like an exchange-traded, it's a bit like an over-the-counter future. It's a derivative, but you have the counterparty risk is bilateral, and they offer a high degree of leverage. So that's one thing which is quite common in Europe. And you also see, well, particularly in the UK, you see spread betting, and it is just a wager. Again, you have bilateral risk. The leverage offered is very, very significant, but also because it's a bet or a wager, you do not pay any tax. So that's another consideration. But I mean, how do you find competitor products in Europe, Georgio?
Yeah, I mean, here the path of an investor is pretty traditional. Go equities, equity options, equity index options, futures, and mutual funds, ETFs. Whereas most investors will start trading FX, going to CFDs, more recently spread betting, exotic type of options. We do offer over-the-counter options. So talk about competition. I face internal competition with other products, such as over-the-counter options. And yeah, it's very competitive. It's very competitive. European investors in general, they look for bundled products, which is a structured product that you can walk into a bank and you could get a rate structured product or a swap, something of that nature that the bankers explain very plainly, and there seems to be an interest in that, especially when in Europe we have negative interest rates nowadays. So a lot of people are reaching out to the traditional banking and structured products.
Right. Okay. I'm going to move on now to the opportunities. All right. I think you've got the idea. We've set the scene. I hope you've got some takeaways as to how it is in Europe. But I want to move on now to opportunities. And I've got a question here which we discussed between us before the presentation this morning. Are there any initiatives coming from Europe that might influence the US? Well, I think the short answer to that is no. But the move to open access, I think, is good. There's popularity of volatility products, weeklies, spotlight options trading in the Netherlands, and it's a special situation. You say there's something going on with this stock, or there's news out here. We will list an option on that at short notice. So that is perhaps one thing. And beyond that, I suppose we're seeing a rise of populism, in various countries on both sides of the Atlantic. But moving on to opportunities that will impact market participants like you, I suppose we could talk a little bit about banks leaving the brokerage business, capital rationing, so business has to move around. Do you want to take that?
Right now, because of all the capital requirements being imposed on banks that are also doing brokerage business, we're seeing a lot of opportunity for accounts that normally would be invited to go to those organizations, but because of the capital requirements, they're going to choose the best of the best clients to take.
Right, yeah.
So where does the rest go? So the rest goes to firms like Saxo, Interactive Brokers, and some others, because IB doesn't have those requirements.
Yeah.
So we're able to take hedge funds, for example, that sometimes some of the firms impose very stringent commission hurdles that they have to achieve and assets under management. We don't have those requirements, so we're happy to take emerging managers with a couple of $1 million and watch them grow.
Right.
So I think there is tremendous opportunity in Europe in particular with that happening where we can grab a lot of business.
Yeah. Georgio?
Yeah, just like Frank, we also see demand in our products, in our services. We feel like a little bit of a bottom feeder. Nonetheless, we're set up strategically, through offices, through the distribution, as well as through offering, to be able to support the demands for emerging managers, small hedge funds, family offices. And there's a few questions there about the retail institutional flow, which we may dive into it. We still mostly service retail clients, but we're seeing quite a bit of institutional influx nowadays because of the Basel III,
the
capital restrictions. So we feel very optimistic about continuing to grow on retail and institutional side. As a result of these changes.
Yes. We sponsored a 2014 study from Tab Group, it looks like this. You can download this free from our website. So there's lots of stats on here, which, although it's a little out of date, gives you some a bit more information. We have plans to upgrade this as well. Another question we had in terms of opportunities was about cross-listing. Is cross-listing a better growth strategy than pushing for direct trading on US exchanges? And I suppose what we can say is that there's a regulatory hurdle that you have to overcome there. And I think if we think back, the Philadelphia Stock Exchange had a fungible contract with the London Stock Exchange for a dollar sterling option, and that never did any volume. You had a similar thing with...
Yes, back in the early part of 1987, unlike the previous panels, I'm not a millennial, I'm a centennial, like unfortunately many other people. But I was sent overseas to help coordinate a fungible trading environment between the European Options Exchange and the American Stock Exchange. And we picked the major market index, which was referred to as XMI, to be that product. So during European hours, the market makers on the EOE can trade XMI. And then there was a switchover, and to about 12 o'clock trading time, they were permitted on the US side to do the trading. And it was totally fungible. And it worked well. There were a lot of challenges, but I don't really see that as something that was kind of useful going forward. Do you agree, Gary?
Well, I think that's right. And if you look, for instance, at CME London, I think that is the process of being mothballed because, as I understand it, people want to trade the real thing, and I think that's always going to be a challenge there. But of course, there is structural change going on in the industry, as we've discussed. There's also, ownership change going on, and obviously I point to the SIBO purchase of BATS. Now, BATS is the second largest, it's the largest pan-European exchange. So that is going to give, much wider reach distribution. So perhaps, a direct ownership there will make a big difference. The other big merger between London Stock Exchange Group and Deutsche Börse, well, that died a death for various political reasons. But so I think you look at things like the BAT-SIBO tie-up. I think that is positive for. It's obviously positive for them, and it's also positive for our industry as a whole, I think, because it enables it to have a higher profile and to get into the various nooks and crannies. Let's see, what else have we got? I mean, we talked a little bit. I want to leave well, a couple of minutes for some questions. We talked a bit about education. I mean, obviously that's a key thing. That's what the Options Industry Council does. But obviously you do
Sure.
a lot of stuff. I mean, you were talking to me earlier about a Chinese video. I'm not sure I'm going to watch that, but you know.
If you look at our brokerage business by accounts, 26% of our accounts are in Asia, 26% in Europe, 40% in the US, and 8% in the Americas. So how do you, as a global broker-dealer, appeal to all those groups? We've taken the initiative to, our website is like a little globe on the top. It's translated into 9 languages. You just click on the button, and whether it's Italian or German or English, Spanish, French, and then the different dialects in Chinese, the website automatically converts. And on top of that, we have quite an elaborate library of videos that are also in different languages. And this morning, I was just curious. I put on one of the Chinese videos, and quite frankly, it was hilarious to see, all these different things in different language and how everything was explained to these clients. And I think it's important that, we can't be everywhere, but if you have all of these videos and you teach people, what's a call option, what's a put option, how to trade, how to send a wire request, and it's in their own language, it's a lot easier for them to gravitate toward you as the broker-dealer, and it really helps them get a better understanding for the different products that are available for trading. And I think you do a similar thing as well, yes?
Yeah, we continue to work on streamlining education and engaging with clients through digital content, webinars, and so forth. So yeah, we continue to focus on more education and events around Europe and APAC. I just want to take a quick second and answer a question here about volatility products. They are coming into place among retail users as well in Europe. Of course, we have the benchmark, the VIX. So we're seeing, it's one of the most popular products at Saxo Bank, VIX options, as well as VStock, which is the European equivalent, Eurostock 50. And of course, some of the VIX derivatives, such as the ETFs and the ETPs and so forth. Here, we're just being very careful listing more exchange-traded products that are derivatives of derivative, and it's kind of very, very cautious about listing too many of these, as oftentimes we see clients are having a bad experience, not knowing exactly what it is and how it works. So we take our time with some of these more complex products, yes. But in general, VIX and volatility products are on the rise with the events that have taken place, including Brexit, and now upcoming UK elections, and later on we'll have German elections. So it's fun times on volatility.
And we also have the Italian elections before May the 24th of next year. And at the moment, one of the political parties is led by a former comedian. And I think that's it's even showing with the incumbent. So I think there's, could be interesting there. Just sweeping up some of the stuff that's been coming in on the monitor here. Are there weekly options in Europe? Yes. Weekly options have been a very popular product, as they are here. Commissions. Go on.
The commissions, the question was, are there pressures on commissions in Europe like we're seeing in the US?
Yeah.
And I would have to say that the US institutional clients have been very aggressive. Often you're told what they want to pay, and then if you're willing to, to take on that client, then you have a new client. One of the reasons why I ran 3 prime brokerage groups. I was an introducing prime broker, and with all the clearing fees and all the fees on, that the different firms would charge to us, it was very difficult for us to compete. And at some point, I said to myself, I'm going to have to join another firm. And that's why I basically joined Interactive Broker for competitive pressures. But I will say that the Europeans are becoming very astute, and they're willing to pay more if the service is there. But I would have to say that they are also looking very closely at commissions. And as you know, we publish all our commissions online, whether it's retail or institutional. We provide 2 commission structures, one fixed and one tiered. On the tiered side, you get dramatic discounts as the volume continues to come into the firm on a monthly basis.
Yeah.
Are you seeing the same with commissions?
Yeah, I hate to be in the United States right now and compete with listed options. But just like Frank said, European and Asian investors are aware. And it's good for the retail. They're having to pay less, and it creates more volume. For right now, we're just observing, no immediate action in terms of price.
But in fairness to the broker-dealers in the audience, I mean, if you provide a value-added service, you deserve to get more commissions. And it's basically the way you frame everything. And, if you're hold-handing, executing orders, well, you know what? That means something. You shouldn't take on a client, and I think all of you know this, just to win the client, and then in the end, you're going to lose money. So,
yeah.
I mean, we do list over close to 30 exchanges, and European listed options, of course, U.S. listed options, APAC listed options. We're looking to list Sydney, and that adds on to the complexity, and cost is a factor, of course. But servicing, 20 offices in native languages, marketing, and all that, we are a little bit more expensive than you are.
And one thing, some of the exchange fees are in excess of some of the commissions we charge.
Right. Okay. A final question here has come in about Brexit. What's the impact of that going to be? Article 50, as you know, is triggered. We have a general election coming up in the UK. It is evident that there will be relocation of some bank staff to other locations in Europe. There is also pressure on the clearing front. The EU wants the clearing of euro products to take place in the eurozone. So that's an ongoing political fight. But I suppose the thing you should bear in mind is that the UK wants access in some shape or form to the European market, and we go between hard exits and soft exits, and the EU wants the cash. So I don't know what the outcome will be, but some horse trading, I'm sure, will take place. I'm also sure that the UK will adhere to European regulatory standards because it wants access to those markets. So it's a 2-year process. We've just started it, but that's just to give you a bit of detail. Sadly, time's winged chariot has sped past, or whatever chariots do. So that's the end of our panel. Thank you very much for coming this morning. Really appreciate it. It made it worthwhile us wearing the bright socks. We're going to be around, so if you've got any questions, come and buttonhole us. But beyond that, I leave the stage to Bill, I hope. Anyway, thank you.
Thank you. Thank you. Thank you.
Ladies and gentlemen, Bill Ryan.
Thank you. Thank you, guys.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.